with the daily market report with a quick update on the culprit that started the momentum break, the N in FANG, Netflix. On June 21st, Netflix left a Gilligan sell signal. That's right here. That's a new 60-day high with a gap up to a new 60-day high with a close at near session lows. That sell signal was tested on July, I think that was around July 1st, July 1st. And Netflix rolled over in front of earnings, as you can see here, turning its 3-day chart down in the process with 3 consecutive lower daily lows ahead of earnings, which was a potential warning sign, and stabbing even lower after the report with a large range decline through its 50-day moving average. The earnings decline satisfied a 360-degree drop at 345-ish. 360-degree price decline. How do I arrive at that? This is basically a logarithmic method that measures price in a non-linear way using what is called the principle of squares, popularized by W.D. Gann, legendary trader W.D. Gann. So Netflix, after the earnings, traced out a little flag pattern. Could have been a bullish test here, but Friday it left an outside down day, which looked like a failure of this flag pattern, and consequently is stabbing lower today. If it stabs back up through, in fact, let me back up a second here, this decline here to today's lows satisfies a 90-degree potential throwover of the 360-degree move. Lots of times stocks have are magnetized to a 360-degree advance or decline and put a cherry on top of the move with a 90-degree throwover to the top side or the downside. But that can only be confirmed on a jackknife back up through the 345 level, the lows of the earnings break. Interestingly, today's lows tied to the cup and handle. You can see this. There's a cup and handle within a cup and handle. I'm going to take these circles out in a second, but right here you see there's a cup and handle, and this breakaway pivot here ties to this cup and handle, cup with a handle here, and the breakout pivot. So we're testing important support in the way of this pivot out of the cup and handle, and that ties to a larger cup and handle. Here's the cup, and this whole cup and handle, mini cup and handles within the context of a handle of within this large cup. So this is an important point here, this 90-degree decrement down from the 360-degree move from high to the earnings low. That can't be a happenstance. 360 degrees stops it on the dime, and it tails back up to close at near session highs. The presumption is that if it breaks back through this last breakout point, that Netflix will satisfy a decline to 50% of the year's range. So here's the low of the year, down around 195 here, I believe it is, and this is up near 424, and a 50% decline of the year's range ties to approximately 309, and that is right about here, and ties to the midpoint of this basing pattern. So the implication is that if it's going to go to 309, it's probably going to do a full test of the 200-day. So this is going to be a good tell, being the first real momentum break in the fangs, and the darlings in this current correction retreat in leadership. If it doesn't hold here, then the market's probably going to suffer a full-fledged momentum decline with tech leading. That's it for now. Good luck out there for the balance of the day. Appreciate your time. Thanks for listening.